Nvidia fell 1%. Lab scores 61 out of 100. Buy. The Blackwell GB200 NVL72 now packs 72 GPUs into one liquid-cooled rack, delivering unprecedented density. That consolidation lifts per rack revenue to $1. Nvidia's hardware dominance is hitting a physical wall because the Blackwell B200 platform pushes the limits of TSMC's co-ESL, chip-on-wafer-on-substrate, with local silicon interconnect, an advanced packaging technology that stitches multiple silicon dies together, restricting yields to an estimated sub-60%. This bottleneck holds back Blackwell's massive 8.0 terabytes per second, a measure of data transfer speed, of HBM3E, high-bandwidth memory, the ultra-fast stack drum used in AI accelerators, bandwidth. While AMD's competing MI300X uses a mature, high-yielding packaging architecture, Nvidia's dual-die design spans two full reticle limits, the maximum physical size of a single chip exposure on a silicon wafer. This choice maximizes compute but chokes supply. The physical reality is that Blackwell's thermal envelope requires up to 1,200 watts of TDP, thermal design power, the maximum heat a cooling system must dissipate. This massive power draw triggers the energy blind spot identified in recent research, where edge AI hardware cannot support process-level energy attribution, the ability to track power consumption down to individual software tasks. This power constraint directly impacts hyperscaler deployment timelines. Wall Street focuses on demand, but the physical constraint is power delivery and heat dissipation. 0.97% drop to $208.65 reflects this growing realization. Investors are waking up to the fact that scaling AI is no longer a software challenge. It is a physical, thermal, and packaging bottleneck that Nvidia cannot easily bypass. Quarterly financials showing modest revenue momentum for Nvidia. By Q4 2026, protectionist trade policies will compress Nvidia's gross margin by at least 200 basis points, hundredths of a percentage point used to measure financial yields and margins. With the Federal Reserve holding its rate at 3.63% and the yield curve normalizing at a positive 0.29% spread, the cost of capital remains a massive hurdle. This high-rate environment increases the hurdle rate, the minimum rate of return a company requires before launching a project, for capital-intensive hardware deployments. Although unemployment sits at 4.3% and CPI is low at 0.6% YoY. Year-over-year, comparing the current period to the same period last year, the macro wave is shifting to friction. A looming trade war threatens to impose sweeping tariffs on semiconductor imports, directly squeezing Nvidia's margins despite its massive 85.2% revenue growth. Geopolitically, Nvidia's entire supply chain runs directly through the Taiwan Strait, exposing it to extreme regional conflict risks. Because TSMC fabricates 100% of Nvidia's leading-edge silicon, any disruption in Taiwan instantly halts global hardware supply. This vulnerability is reflected in TSMC's massive monthly revenue of $417.0 billion NT dollars, New Taiwan dollars, the official currency of Taiwan, which highlights how concentrated the entire AI supply chain remains. Furthermore, tightening export controls restrict Nvidia from shipping its high-margin H200 and custom H20 GPUs, graphics processing units, the specialized processors designed to accelerate parallel computing tasks, to Chinese hyperscalers. This regulatory friction is compounded by a rising political backlash against big tech's massive energy consumption. These combined macro forces act as a powerful headwind, dragging Nvidia down 0.97% to $208.65 as the market reprices geopolitical vulnerability. Nvidia Compute is trading below its 20-day average at 200. Nvidia's management is leading with a single phrase: significant resilience. It appears in the earnings call, the CFO commentary, and every investor slide. That phrase is designed to make you feel the supply chain is under control, no shortages, no margin surprises. What it's designed to make you not think about: The fact that resilience is a PR word for we pre-bought everything and locked in prices before the trade war hits. Now flip the table. Insiders net sold 1.02 million shares in the last 90 days. That's not a rounding error. That's the entire executive suite cashing out while the stock sits at all-time highs. Historically, when Nvidia insiders sell this aggressively, it precedes a margin reset or a demand air pocket. R&D is up 43% YOY, 8.6% of revenue. But that's not innovation, that's inflation. The cost of a 3nm wafer just jumped 18% because of EUV export controls, and every dollar of R&D is now fighting a stronger dollar and a higher Fed rate. Analysts keep raising targets. Tigris just took theirs to $425, but ARK trimmed its position, and the bid is thinning. That divergence is the tell. What management is saying is resilience. What the lab hears is we're stockpiling before the storm. Colette Kress said they'd exit the year in the mid-70s for gross margins. She's already walking it back, working to hold mid-70s. That's not a hold, that's a downgrade. And when Stacy Raskin asked about OPEX, Jensen pivoted to our supply chain has known for a long time. That's deflection. The momentum breakdown for Nvidia. RSI sits at 38, pointing to neutral zone, waiting for a clear directional signal. MACD is currently bearish, with downward histogram pressure. Nvidia's bull case rests on the volume ramp of Blackwell GB200 NVL72 systems, which consolidates 72 GPUs into a single liquid-cooled rack. This platform transition secures an insurmountable lead in compute density, while its forward PE, price-to-earnings ratio, a valuation metric comparing stock price to projected earnings, of 16.4x remains highly attractive. But here's what breaks the bull thesis. Any thermal design or packaging yield delay on the Blackwell platform will instantly compromise near-term guidance. Furthermore, tightening export controls already block high-margin GPU shipments to China. Needham's conservative $270 price target reflects these mounting execution headwinds, showing Wall Street's growing anxiety. What is the critical question the market is ignoring? It is whether hyperscalers can secure the massive power delivery required for liquid-cooled racks before local utility grids fail. The lab's answer is clear. Power utilities cannot upgrade substations fast enough. This means physical grid capacity, not chip demand, will cap Nvidia's deployment rate in late 2026. We are tracking this power bottleneck because it represents the ultimate physical wall for AI infrastructure scaling that software cannot bypass. Our buy call at 210.69 is down 1%, but our buy call at 207.41 remains in the green. If Nvidia successfully ships Blackwell systems by Q3 2026, the stock will easily break resistance to reach $224.10. However, if packaging delays persist, expect a drop to key support at $200.42. Backed by our AI score of 61 out of 100, we expect the successful shipment path to prevail, making this consolidation a buying opportunity. Here's the macro picture shaping Nvidia. Tightening U.S. export controls on advanced silicon directly restrict Nvidia from shipping its high-margin H200 and custom H20 GPUs to Chinese hyperscalers like Tencent and Alibaba. Furthermore, any escalation in the Taiwan Strait threatens TSMC's fabrication of CoWoS packaged chips, which could instantly halt Nvidia's global hardware supply chain. The massive demand for generative AI accelerators is driving Nvidia's transition from the Hopper architecture to the Blackwell B200 platform, which relies heavily on advanced packaging. This shift requires securing massive volumes of high-bandwidth memory, HBM3E, and TSMC's CoWoS capacity to sustain triple-digit data center revenue growth. The primary near-term upside catalyst is the volume production ramp and initial shipment of Blackwell GB200 NVL72 systems to major cloud service providers. Conversely, the biggest downside risk is any thermal design or packaging yield delay that pushes back these customer deployments and compromises near-term guidance. Nvidia's 4nm Blackwell ramp is crushing Wall Street's margin models. This is the signal you trade on. Bulls or bears winning Nvidia. Comment your prediction. This isn't financial advice. We're engineers, not brokers. Markets move fast, data gets stale, and past performance never guarantees future returns. Always run your own numbers before pulling the trigger. Hit subscribe if you want die-level breakdowns before the earnings call. If you want our full breakdown on Cerberus, the link is in the description. Stay sharp, Lab.